Hey, good morning, good afternoon, good evening, folks. Hello again. My name is Eric Veliquet. I'm the CEO of the Blockchain Supply Chain Association. I see some folks are still joining, so we'll give it one more minute and we'll kick this off. We are live streaming both on LinkedIn and YouTube as well. And we'll let our friend Andrea introduce our very special guest today. So give us about one more minute for folks to join, and we'll start the live session. All right, folks. So hello again. My name is Eric. I'm the CEO of this lovely organization. We are the Blockchain Supply Chain Association. Our mission in life is to help the supply chain folks understand blockchain technologies as it relates specifically to supply chain. So logistics, transportation, trade finance, inventory, movement, you name it. All we see around us, right? Our clothes, our computers, our phones, everything comes from somewhere else these days. So that's all about supply chain. Supply chain is broken these days and we need to fix it. And one of the ways that we can fix supply chain is certainly technology. And technology is making great strides, but still needs a lot of understanding. And that's what we do in life. At the association, we help folks understand, we help folks prepare for new technologies like blockchain. And we do that in three ways. We do some advocacy work. So we work on policy. We work on global standards as well. We are members of ISO and different standards organizations. We help shape those policies. We do collaboration. It's all about collaboration. It's all about the network. It's all about friends in the industry. So we work on specific projects and we put people together. And of course, we do education. So through webinars like this, helping folks understand what's out there, what the challenges are, what the solutions might be, all the way down to newsletters, workshops. We even built a course for some learning organizations around blockchain, very specific to supply chain. So with that, our friend Andrea in Europe is going to take over the lead here. Again, we are live streaming both on LinkedIn and YouTube. We will make the recording available after the fact as well if you've registered. And if you have any questions, please use the Q&A button as much as possible. Feel free to chat as well. And we'll try to get to your questions. Manoj, I don't know if you prefer taking questions as we move along, or if you prefer keeping those at the end, so let us know. And we'll try to manage that for you. You also have access to sharing your screen. If you don't, let me know and we'll fix that real quick. So with that, Andrea, I turn over the microphone to you.
Wonderful. Thank you, Eric. And pleasure to have you here today. Today, we're going to take a step aside, actually, compared to what we are used to do in the space. We're not talking specifically about blockchain, we talk about digitization in general. In my specialty, which is trade finance, I thought it would be great to have somebody that is dealing with artificial intelligence, machine learning, as sort of perfect companion of blockchain technology. I think the message, I mean, the marriage of this technology is the quasi-perfect one. Those who follow us, who have been following us actually during our path this year, they've seen how much we went in depth into subjects like sustainability, ESG, and similar stuff. So this is maybe one step aside, but not too much. So we're going to rebalance as much we talk on those topics. It's a great pleasure. I made acquaintance with Tradeson a few weeks ago. It was a very lucky meeting with some colleagues in Manoj. So I had the idea of inviting Tradeson to close down the very first part of the year 2022 to have a speech talking about their technology, what they're doing in the context of digitization. 2 days ago, we had a very informative meeting with David Maynell of ICC UK, talking about URDTT. So this is the perfect continuation of the talk we had. I don't want to steal Manoj too much time, because I know he's got a lot of things to share with us, lots of topics. So Manoj, the stage is yours now. You can take the lead on your speech. And by the way, thanks for being with us today. It's a great pleasure and honor to have such a professional with us today.
Thank you very much, Andrea and Eric, for having me here. It's a great opportunity to share my views. Before I start, a quick introduction of my background. So I am the Chief Product Officer at Tradeson Inc., which is a San Diego headquartered fintech dealing in providing SaaS solutions to fighting financial crime and trade and automating the whole process. Coming with a background of about 3 decades in banking technology, specifically corporate banking and trade, very, very sharp focused. I've worked in 2 of the largest banks in the industry, as well as with IT services and product players. And now I find myself, in a fintech like Tradeson, where I'm trying to drive the vision for the product. So with that brief, today we're going to cover a topic which I think many of us have a lot of views on and must have heard of. But what I'm going to try and do is try to summarize some of the issues in what we call as digitalization of trade, and then also talk about the work that's going on to overcome these issues. So hopefully over the next 40 odd minutes, I'll be able to share something of value to all of you listening in. And if you do have alternative thoughts or questions, please feel free to raise your hand. We might take them at the end because I may not be able to see that the hand is raised, but Eric or Andre will interrupt as needed. So with that, I hope everyone can see the screen. I'm going to use a bunch of slides. I'm not a PowerPoint expert, so apologies in advance. They are a little wordy, but I'd encourage you to listen in more and try to read less on the slides, because there's a lot of English text on it. But necessarily, I'll try to make it as crisp and clear as possible. So let's get started. First of all, just in terms of a little bit of background on what this digitalization is all about. So having a strategy to grow digital is kind of becoming an imperative across all businesses, and trade is no different, right? So, but the irony is that trade is one of the oldest industries in the world, right, since times immemorial, and yet it has been amongst the slowest to adopt, to go digital, right? Obviously, that's not by choice. There must have been reasons and barriers to adoption, right? And to compound this, now the onus is largely falling on the financial institutions involved in servicing trade finance and trade operations to gather all relevant data that is needed to process trade finance faster and more accurately. And then they're also responsible for preventing financial crime. Now, this is easier said than done, right? I think one of the things we need to understand, there's a slight difference between digitization and digitalization. There's a misconception that these two are synonyms, and I'd just like to spend a minute to differentiate these two. The process of converting any physical asset or form into a digital form is known as digitization. An example would be scanning a paper and creating an image. Another example would be taking a real-world asset like a goods or a bunch of documents or money and converting it into a non-fungible token on the blockchain. These are examples of digitization. The pandemic has been a catalyst for digitization in trade, right? And subsequently, a lot of data, both relating to documents and transactions, is now being generated and stored in various formats across the globe. However, you need systems and processes to use this data and to accomplish the business outcome, right? That process of using this data and applying systems and automating is called digitalization. Information sharing and automation are essential to achieve digitalization. And I'm sorry, these words are very confusing even to pronounce. right? But we'll get it. So digitalization, of course, helps connect the physical and financial supply chains, and it includes the process of the part of digitization, because first the physical has to be converted to digital, then it has to be integrated with the financial, which is also in digital. But then you need to work with these two together. The problem is banks who are responsible for, preventing financial crime and trade only have access to part of the data in the ecosystem. And they are responsible for bringing together all this data from various stakeholders using, technology, which of course has many options and provides the ways and means to do it. And then looking at this data, analyzing it, and getting a clearer picture of the larger ecosystem, thereby preventing financial crime, as well as processing it more effectively and faster. So this whole process, which is basically digitalization, is what is needed by the banks. And let's just then talk about, if this is what is needed and is imperative to the whole process, what can we do? And why has it not happened? So we've said maybe digitalization will include technology. It will require a lot of collaboration and standardization. The thing is, technology is not the main problem. Actually, my view is that the absence of collaboration and standards have hampered digitalization more than technology options. Technology, in a way, can bring consistency, wider coverage across the ecosystem, and also help optimize cost. But technological innovation alone cannot be successful, as we all know, right? There are a bunch of other factors like legal criteria, commercial options, scalability, right? They all decide what can make a technology click. But one of the key points is that there has to be incentive for taking up any innovation in an ecosystem. And without that incentive, obviously that technological innovation will not be adopted. And that, I think, underlines one of the key critical challenges that we've been facing over time. Nevertheless, let's just summarize what some of these challenges are. And then we'll cover one by one in the next few slides what exactly is happening in each of these spaces to overcome these challenges, right? We just talked about large data islands, which is nothing but a bunch of data sitting all over the place, right? We all know about the elevated privacy concerns, right, over data sharing, and now the tighter regulations that are involved in that space, making it actually more difficult to share data, even though the requirement is to share more and more. The maturity of some of the digitization solutions itself historically was suspect, and over time these have matured, and with the advent of blockchain, which has been a huge hope, but even other technologies like artificial intelligence and natural language processing, as well as secure cloud computing, these are really going to enable the process of digitization. So we'll look at some of that. And then, of course, the cross-border applicability of rules has been one of the main problems of trade from time immemorial. Lack of standards for data exchange, whereas we want to do exchange, but we don't have the standards, so everyone's doing it their own way. And then finally, interoperable solutions and taking a holistic view of how technology will help banks do a better job at compliance and KYC. So that's a little bit of a diversion in terms of the problems, but we'll look at that. I'll also cover briefly how blockchain has impacted trade, or has rather needs to impact, and why it's not impacting the way we all have loved it to. Right? There's been a lot of hype, there's been a lot of experiments, but it has not taken the level of adoption that we would have liked it to take. So we'll cover that briefly as well. So let's begin. Large data islands, right? Look, banking data, shipping data, logistical providers data, regulators data are some of the big data islands that have gotten created over time. We need data centralization to happen, but it can only happen in an anonymized way, right? Partners, if they can share a knowledge base, it will not only reduce cost using shared services, it will also improve the quality of decisions as you get more diverse and real life representative data to make those decisions. So players are involved in bringing together these large disparate pools of data, but it's going to take a collective effort, and we have a long way to go. Of course, regulators are providing direction for data sharing, to fight financial crimes. And the fintechs are obviously providing the technology innovations and solutions. Some examples, and this is just like not even the tip of the icebergs in terms of what's happening. There's so many different initiatives in progress, but we'll talk about them eventually a little bit in reference as we go along. The Financial Action Task Force has released a report recently talking about how private and public sharing of data can be done, meaning what can be shared and for what purpose. The objective of that is to help the regulators design regulations that will cater to these things, defining what can be shared and for what purpose, and limiting it, and yet allowing data share and bringing clarity to what can be shared. If you look at it in Singapore, the Monetary Authority of Singapore is right now on the verge of launching what they call as the Cosmic platform, which will connect all the financial institutions. Essentially, it's a mechanism for sharing data. And they've built the legal framework around it, which also supports what can be shared and for what purposes. Right? This is going to probably go live next year, but it's a huge advent in one jurisdiction. But similar, initiatives are going on in other areas as well in all countries, all the major economies. So it's just a matter of time before these, at least within countries, will become large ecosystems. And then we're going to talk about how to share between country level ecosystems. But then the private enterprise is no less, right? If you think about, there's a fintech called Monatago, who has launched a secure cloud-based duplicate financing prevention solution. They're live in many sites and they integrate with Swift. So they actually build an ecosystem of data around documents. And they get a lot of this information from Swift, which is the de facto standard, of data exchange between banks, as you know. So they're building a huge ecosystem which can be used across jurisdictions to check for duplication of documents. And that in turn can be used to prevent duplication financing. And they were on the blockchain, but they moved to secure cloud. So that's another example of private enterprise working with, they work with the regulators in India to launch this solution for various banks in India. So I think it's going to be a partnership between regulators, fintechs, and of course the banking world. But then the banks are also directly going to work one-on-one with the fintechs, like Tradeson, from where I come. We are offering innovative solutions, and there are many such. We're working directly with the banks. But somewhere we got to converge all this. So more about this later. Moving on to the second point about privacy concerns, right? We all know the regulations have become much more stringent. The concerns are much more valid in today's world, interconnected world. So, but I think the good news is that technology is going to come to the rescue. Maturing of the trust frameworks, aided by the likes of digital ledger, distributed ledger technology, and confidential computing, are going to help process and secure data, right, without need to identify owners. There are various algorithms, but some of the newer ones like zero knowledge proof, data encryption, and self-sovereign identity are really going to help share data on a minimum need to know basis, right, without actually compromising all personal identifiable data. So digital identities will become the norm, whether it is for individuals or corporates. And these are evolving into self-governed frameworks, typically known as SSI, an acronym, but essentially these are going to allow the owner of the data to decide what they can share with whom using a trusted third party, because essentially it's a problem of who do I trust with my data and what do I want to share. So if that can be controlled, then a lot of the concerns around data sharing moves away from relying on the platform to control to the individual having the control. So I think this is going to make a big difference. And then unauthorized access will be prevented because you just not need to share all the data. So the concept of self-sovereign ID, which I just mentioned as SSI, is really going to help in this space. There are, of course, regulations coming in this space as well. We talked about digitization solutions, and I think it's human ingenuity that has caused the biggest problem in this space. So Digitization in trade has been the most difficult to achieve. Why? Because we just have so many different formats and structures of documents. The first phase of digitization relied on the concept that you can construct the model of a document and thereby define a template based on which you can extract. Obviously, that failed miserably because there are no models. Documents change depending on the stakeholder who's generated them. And yes, some things like transport documents from major shipping lines and all can be standardized because they capture a large part of the market. But by and large, the variance is huge, and there's just no standard way of figuring out what you're going to get in a document. Not to mention that the quality of the document, kind of printing, everything can challenge extraction methodologies. But complementing optical character recognition, which has been around for decades now, right, and for which we've been struggling, complementing that with natural language processing that can be used to understand text and context within a piece of English verse, applying deep neural networks and visual recognition techniques from artificial intelligence, and then using machine learning to have repetitive learning and improvement as you go. These can significantly now enhance the quality and outcomes of data extraction. And we're seeing a lot of improvement now, as well as the fact that you're not burdened with large amount of templates which are a huge cost of maintainability, right? So I think the work has moved, the technology has moved very far ahead. And even in Tradeson, this is something that we are leveraging heavily in the digitization solution that we offer. We actually use neurovisual techniques to identify the contents and the placement of various content in the document. And there's no concept of template. And with that, we can recognize and extract data from various types of documents. If we move to the next point about cross-border applicability of rules, now, regulators have been providing a lot of direction, but the problem is, even though a lot of standardization and regulations have come up, standards have come up, different jurisdictions have been having varying rates of adoption. The most common example that I think everyone talks about is the electronic bill of lading, which has been around for now almost a decade, but hardly a handful of single digits in terms of jurisdictions that give it a legal standing enforcement. So it's been taken a lot of time to adopt some of this, but the regulators are working on it. And now there are many standards which are getting, and we'll talk about that in the next slide, how that are evolving and covering the entire ecosystem. So these standards now help regulators define regulations that are actually going to be in consonance with each other and not create divergence in policy or standards. So, UK recently passed a legislation that will make commercial documents equivalent, acceptable as in digital form under English common law. And that's going to come into place next year. Australia's Fintel Alliance, the Joint Money Laundering Intelligence Task Force of UK, they're all working in this space, as are the US regulators, right? There's a lot of work going on in terms of adoption and as well as defining of country-specific regulation, which aligns with internationally accepted standards. But the thing is, before regulators go and define these local laws, we need to make sure that the industry-wide standards exist. And I think that has been one of the reasons why regulations could not come up and which could not be aligned with each other across jurisdictions. So let's take a look at how these standards and regulations have evolved. Probably the first regulation that, or I should say standard that came into place was the MLETR 2017, right? Which was based on the UN Commission for International Trade and Law. And a number of countries had adopted that model or agreed to that model rather. But what it did was it allowed for functional equivalence between a transferable physical document and an electronic record. And in trade, that's a very important concept because a lot of the events in trade are driven around the possession of documents, right? And then by that virtue, if you have electronic records, how do you control what is in the record, who has access, who has title to that record? That if you can determine that, then obviously can do this. Everything that was being done on paper could be done via electronic means. That's what was the aim of MLETR. However, it struggled because it was a little bit narrow in terms of its definition. It's a rule, it's a set of rules, of course, but there are a lot more problems to be. Then the ICC came up with the EURC and EUCP, which is about converting rules that were being applied for doing commercial checks on documents and converting them to apply on electronic records. Because if records are there, then the rules have to be slightly different. And certain things that can be done with paper cannot be done with electronic records, and vice versa. So these rules came up, but again, very focused on documentary letters of credit and collections. But there are many other rules, and there are many other products as well in the trade world, right? So yes, a good advancement, but not adequate in itself. So the ICC, working with all the other member bodies, came up with the URDT, which was, I think, the first universal set of standards for a digital trade economy and ecosystem. That has really helped. And what it has done is, it is an overarching framework, and how it's different from MLETR and others is that it goes beyond just financial institution and applies to corporates who can adopt to it, as well as non-banking financial institutions, everyone involved in the trade ecosystem. So it helps standardize, but again, in terms of certain rules, not necessarily defining the standards, but telling how people can exchange data, what data can be exchanged. But it was still, I think, and it's very new, it's just been kind of launched last year, so it's going to take some time, just given the diversity we have in the ecosystem, but it's a huge step forward. But then coming back to what was needed along with the URDT is a set of standards. And that's what gave rise to the Digital Standards Initiative by the ICC, who have essentially worked with many standard setting bodies and international organizations, including DCSA, to frame a set of standards that can help everyone in the trade ecosystem define and understand what various data should be and how to process transactions. So it's not just dealing with data, it's also dealing with how do you define, how do you interpret, how do you use the data, and how do you process. So the Digital Standards Initiative includes what is known as a standards toolkit. And within the toolkit are definitions of various standards that can be used by all players in the supply chain. So there'll be less translation problems. Everyone can follow a standard way of identifying pieces of information, storing pieces of information, transmitting pieces of information, including the logistics players, the banks, or the corporates, the shipping companies, everyone. And then how to control these documents as well, because trade is a lot about controlling title and verifying title to electronic documents or electronic records, as the case may be. And finally, it has built on the MLETR and URDT to ensure that the framework for data exchange remains the same. So they've not gone ahead and defined new standards in terms of data exchange, but they're leveraging all the previous standards and bring this all together in one place. So I think it's a huge step forward, but again, a lot more in terms of adoption. And because it's so new, I think it would be unfair to judge it so early right now, and we have to give it some time. And all stakeholders are working together to try and create awareness, as well as do work around aligning with some of these standards. Just noting the amount of legacy technology that is out there, which does not comply with this. This is no mean task. This is going to be a huge amount of effort to get to the standardization. But I think over time, in a gradual incremental way, we'll get there. So good news, we got to give it some time. At least we've figured out what the standard should be. We've agreed to them as all stakeholders, and now the regulators will define rules on what can be done, which will revolve around a common set of standards. Let's pivot to a slightly related topic, but not necessarily a challenge. But how is all this going to help? So if digitalization happens, how is it going to help compliance in fighting, financial crime in trade as well as in KYC kind of actions? That is a key question. And I think if you look at historically what has happened, most of the intervention has been happening after the fact. But now as volumes grow and as costs and the requirements to check for financial crime prevention are increasing from the regulator side, more and more automation and more real-time intervention is needed. And that's where, if we have the data, artificial intelligence can help in a big way. And it's going to transform how compliance is done in global trade. Move it from after the event into real-time intervention. Some of the things that are going to help is, with the data, we'll be able to analyze, build entity resolution network graphs, do risk scoring based on various parameters, visualize all these parameters dynamically in real time, be able to look at hidden network relationships, get real-time embedded alerts when things change. So all this will obviously enable a real-time intervention process as we go along. And that's why we'll move away from post-facto to during the intervention to prevent financial crime. That said, we do need anonymized models to store this data, because unless this data can be anonymized, it won't necessarily be possible to share it. And then having metadata which qualifies the actual data is also very important. Having performance data is going to be needed. But the good news is that secure cloud platforms offer an alternative, because secure cloud platforms, what they do is, it's not just about having data encrypted at rest or in transit, but also about having data secure while it is being processed. So only the party or the entity that gave the data knows what it is. And while it is in the computer system, nobody actually else can access it. So it's even secure while it's being processed. And then you can generate the insights that are needed to make decisions. However, a word of caution, I think there's a misguided expectation that you switch on an artificial intelligence, machine learning trained model, and magically results will start coming. It's important to understand that AI works. AI-driven investigations are basically by nature are probabilistic and not deterministic in nature. So you need more and more data and more time as we gather data before these probability of getting it right can become 1. And 1 is the maximum, by the way, in case you're not a statistics freak. But it's going to be a little bit of a journey, but I think the possibilities in terms of the kind of analytics that can be done and the kind of inferences that can be made are huge. So if we can do all this, how is it going to change KYC? So just a word on that. KYC, again, traditionally in the context of banking and financial institutions, was a process that was done at the time of starting a new client relationship. And then there would be periodic reviews based on whatever else is learned, and manual forms to be filled and collected and a model to be updated. Now, when you can get this data in real time, as things change in the world, and you can conclude and determine in real time hidden relationships. You can get alerts around adverse media in real time. You have to combine, of course, the data that is available within the bank as part of historical transaction data, and mix and match it with external source data, which is coming from other sources, public data. But then you can visualize and determine structures, beneficial owners, and all this can be done in real time. So this process that was a periodic process becomes an ongoing process. And again, if things change in terms of the client relationship, very quickly can action be taken to remediate or to discontinue a relationship. So having seen how AI can disrupt the area of financial crime prevention and KYC, I just wanted to give a brief mention on what Tradeson, the organization that I work with, is doing. Tradeson has a platform that provides digitization, real-time compliance checking, and document checking service on a SaaS basis. And as I mentioned earlier, we're using OCR coupled with natural language processing and curated machine learning, along with neurosymbolic artificial intelligence, to extract and standardize data from complex trade transactions. Trade documents. We don't need templates. And then we also use AI in the space of reviewing historical transaction data along with public source data, like shipping data, like the regulators' compliance data, to determine whether transactions are complying with all the regulations in place. So whether to apply for dual use good check, fair price check, vessel tracking, whether no illicit maritime activity. We rely on a bunch of partners also to give us public data, but we have our own algorithms that help provide these real-time alerts. And then we also have an automated document examination solution that provides the commercial UCP and URC mandates to be applied on transaction documents that have been sourced. So we're in the process of helping deal with the paper, but we are also moving towards aligning with the electronic records, which are obviously coming way. So building the EURC and UCP standards into our doc check module is work going on the way. And we're also working on a number of other initiatives to make our solution compatible with the electronic world as well as the document world. But still, by and large, since most of the ecosystem is still relying on a lot of paper, we're sure a lot of financial institutions and corporates can actually leverage this solution that we have to offer. Moving on to, I mentioned about the blockchain being a potential, it's been the biggest hype as far as trade is concerned. But I think we are a little disappointed by the uptake, right? And one needs to understand why. But it's important to also understand blockchain alone is not a panacea, right? It cannot digitalize trade alone. We need all these other technologies to work along with it, including the IoT, which can bring the real world events to digitalize and make them available to all other participants in the ecosystem. We've gone through the benefits of blockchain, we've heard them, so I don't want to spend too much time repeating these things, but they're listed here, just for a recap purpose. I think the point is, why was blockchains and still continues to be such a big promise for trade? Obviously, it involves anything that involves transfer of value, storage of value, trusted data verification. Any solution that can provide that is going to be really useful in trade. And blockchain does that, right? The DLT concept does that. So whether it is smart contracts needed for letter of credit issuance or supply chain financing, or checking for duplicate financing, where you need to track the uniqueness of a document asset, whether it's shipment tracking, as I said, through IoT, whether it is document status and who owns a particular asset like a document. All these use cases have been piloted by many banks, but they've not necessarily gone to full-scale production. They are being piloted and they still hold promise, but I think let's just talk about what the challenge is. The biggest challenge is you need scale, right? Everyone in the system needs to be aligned to that blockchain network. Otherwise, it's not going to help, right? If some of the key players are off it, then just the banks having access to it is not really going to make it happen. And I think that's a key issue that we have. One of the latest use cases I wanted to mention was, recently a fintech has launched a platform that allows originators to package trade finance products into standardized investments. So, your trade assets like receivables, payables can be securitized and sold in the secondary market. And apparently this is claimed to be one of the first fully regulated, supported by the local regulators, trade finance backed fungible security token and it's built on the XDC blockchain network. So huge scope. Solutions will keep improving. They'll keep getting richer, but I think we need to see why the adoption has not happened. And a brief look into that. We've heard about the blockchain consortia. They're all listed here, and we're not going to go into what these consortia do. But this was the answer to the large scale adoption that was required. At least the financial institutions got together with the fintechs and the big major technology providers, the BaaS agents, as we would call them, the blockchain as a service providers, to create solutions for various use cases. But again, this is like I've been repeating myself, hopefully, but let's see why I think, and this is my view. Again, I'd be welcome to hear other perspectives. This is not the only reason, but I think three things are quite apparent to me, at least. I mean, setting up blockchain infrastructure and services requires significant investment, right? Initially, there were no BaaS providers, and the banks and financial institutions were getting together to build these infrastructure and services on their own, in partnership with some of the major IT product owners. These investments can take years to pay back, right? And I don't think everyone has the appetite. In fact, many banks were part of these consortia in a kind of a non-committal approach. They had the fear of missing out, so they wanted to be glued in, but they were not really investing significantly in terms of capital, not money just, but in terms of creating solutions on the technology platforms which can enable the solution to become more complete. I think that has been a key thing, and we've all heard about the recent closure of WeTrade, which was one of the biggest consortia, right? And, due to just investment drying up, and then of course it was just not giving an ROI to the people involved. So this continues to be a concern, but hopefully the other consortia are still in the game. Interoperability is one of the key things. Each of these consortia are built on one or more of the various blockchain infrastructures, and we need to make sure they talk to each other, because all of them support a specific number of use cases. None of them offer all the solutions needed within the trade world. So somebody has a smart contract for LC issuance, somebody has just built the duplicate invoicing piece, somebody has done the goods tracking bit, and users can't be expected, users as in the ecosystem stakeholders can't be expected to connect to different blockchains for different things, right? So what we need is a network of networks. And that's going to happen as interoperability between these various blockchain infrastructures comes into being. It's being worked upon, will happen eventually, but there will be consolidation and elimination of some of the infrastructure. So we'll probably be left with a couple of, maybe three infrastructures which will have the largest scale and will provide the maximum number of use cases and provide interoperability between themselves. And then I think governance, which is kind of related to the first point, because keep in mind that the starters of these consortia were banks. And while they came together, the irony is they wanted and needed to collaborate, but they also need to compete, right? So by definition, there is an element of, there's a dichotomy there which needs to be addressed. And when you're in a common forum, there will be a little bit of friction or resolution needed to decide the rules that govern the collaboration, right? And that, while we don't hear that in the public domain, that does lead to lack of engagement at times, because everyone wants to drive a certain agenda, and then if the others are not with you, you obviously may take your own path if you have the resources and the means to do that. There have been, of course, probably many other reasons, and I'm not the expert on this area, but I just wanted to share my view on, I think, why some of these consortia have not taken shape. So with that, I think I'm going to stop here. I'm sorry if I missed anyone's hands being raised, but I'll open up the floor for any questions people have on what I've said. Thank you.
Oh, sorry for interrupting you, Manoj, by the way. That was great talk, indeed. You covered a wide span of topics that I do like. You didn't miss any raised hands, by the way. I don't see many. I don't see any. And I don't know if Eric can check again. But I would love to start, you see, with the questions, because you touched some interesting points, by the way, that would love to open the discussion. You talk frequently about regulators. What do you envisage as their own role in bringing all ecosystems data together and provide innovative solutions? What's your opinion to this, Manoj? I would like to start from this.
Yeah, sure. I mean, I think the regulators have a key role to play. If you look back on some of the most successful initiatives, and when I mean successful, I don't mean in terms of the technology quality and accuracy of the output, but in terms of their adoption. They're mostly being facilitated by the regulators in various jurisdictions. And I gave the example of Cosmic, which is coming up in Singapore, but there are numerous examples across jurisdictions where if the regulator can bring the financial institutions and the fintechs together, and provide the legal framework behind it, I think that opens up the biggest space and fosters the collaboration. Otherwise, there is always the concern on whether something will be within the rules. That'll be the first concern, right? And then also the point of finding the other players in the ecosystem also is a concern. A regulator always has all the connections to the network. So all the banks are connected to the central bank, for example. So if MAS plays a huge role in this space, they've launched so many initiatives, or whether it's the Hong Kong trade finance, blockchain initiative, or if you talk about eConnect in UAE, which is becoming to fruition very soon. All these initiatives, KYC, digital identity in India for 1.3 billion people. In Estonia, there's a lot of work happening in this space. Very little heard about that, but they're one of the forefront in space of adoption of technological advancement. If the regulator brings the parties together and defines the right framework, I think that's when these initiatives take a lot of traction and advance. So I think the regulator has a huge role to play, and wherever in the jurisdictions, wherever the regulator has taken the lead, the innovations have happened at large scale.
Awesome, Manoj. Just another question on my side to raise some interest. We're talking about data massively today. We no longer talk about documents only. As for data disclosures, this matches perfectly with what ESG, environmental, social impact, and governance is trying to do. What's your take into this, and what could be possible plans for expansion into this field by Tradeson? I'm deeply interested because this is a topic we often touch with our meetings. You see, also hyperledger supply chain and trade finance stake.
Thank you for asking the question, and I'll give us a little long-winded answer because I do want to make sure this is a topic that still needs a lot of understanding, right? ESG in trade, and I just want to spend a minute on how exactly ESG in trade works, or how is it going to help, right? We've all been hearing about the movement towards ethically sourced and manufactured products, right? And globally, all manufacturers and suppliers are coming under greater scrutiny in terms of what kind of ethical practices, what kind of environment-friendly practices are they following. Customers are demanding, transparency into that. Digitization offers a way for greater transparency. That's the first point I'd like to make. The second thing is a lot of money lending will be moving from traditional financing into what is known as sustainable financing. And sustainable financing refers to the implementation of ESG analytics actually into an investment strategy. It gives weightage to sustainability factors and risks, just as much as other traditional considerations like credit risk, right, when making an investment decision. So moving from traditional financing criteria into sustainable financing, and you can see a lot of traction and movement around that. So we're clearly seeing that there's adoption and understanding by all major stakeholders that ESG-centric companies are going to, succeed going forward. And there is a pool of evidence to suggest that the yield, the long-term risk-adjusted returns for such companies that follow ethically compliant and environmentally friendly practices are going to be higher. So investors are asking for such kind of companies and equity. So with that, we think at Tradeson, we've taken the notion that this is going to be, again, another imperative must-have. And one of the key problems we're having in the trade finance space is that there are no current universal standards for evaluating sustainability. Okay, but a number of models have come out, and we've aligned with one particular model. The ICC is publishing a proposed standard framework to provide clear definitions for sustainable transactions in trade finance. And I think it's currently in industry consultation, as far as I know. So hopefully we'll see it soon. But just coming back to what Tradeson is doing, we are actually right now in the process of collaborating and building an integrated solution with a fintech company called Coriolis Technologies, which offers a unique automated ESG scoring mechanism for companies. Their tool creates what is known as an ESG passport, but for goods that are being traded in a particular transaction. But it takes into account the ESG profile of the components, the products, the finished products, as well as the various players involved in the supply chain. And it comes up with an independently derived score that represents the sustainability profile of all the players and the goods involved. So we're going to be bringing out our solution in partnership with this company, which will enable financial institutions to get an indication of the sustainability profile of the stakeholders and the actual goods being or services being traded. And we hope it's a small beginning. I think we're, from what I know, we're probably one of the first to do this in terms of fintech solution providers. And hopefully, as the standards develop, we'll be aligning with those emerging standards. But as we speak, this current standard that we are using, the model that Coriolis has built, is based on Cosmos Working Group, which is a collaboration consortium of almost 40 organizations, including the ICC and major large banks. So we are confident that the work they've done in terms of defining the ESG model will not be too divergent to what is finally accepted by the ICC. And we hope to launch our solution in the third quarter, which is just around the corner.
Thank you, Manoj. By the way, we know pretty well Rebecca Harding of Coriolis Technology. She was here with us, you see, on May the 12th, displaying, you see, giving us insight on ESG. And on the big meeting that we had those days, she's often guested by the Happy Letter Trade Fancy as well. So we know her very much, and we're glad that the two companies collaborate for mentioning trade finance and ESG, which is a great marriage to come.
Yeah. I see a question on the chat, which Abhishek Gupta has asked. Please share your views on role of quantum computing in trade finance digitalization, and will it provide better solution as compared to blockchain? And I'm not an expert on quantum computing, but I think quantum computing addresses a slightly different challenge from what our DLT solution can provide. I think DLT is better aligned to meet some of the core needs of trade finance in terms of ownership, tracking, assignment. The challenge that we've heard in blockchain often is performance for large scale processing, right? And that's where quantum computing comes in. So yes, quantum computing could help if working along with blockchain, but I personally feel blockchain has the essential attributes that support the needs of the business and trade finance. And from what I know, the latest generation of hybrid blockchains have made a significant quantum jump in terms of performance and also in terms of their energy sucking profile, if I would call it that. They've become hugely energy efficient. So I think blockchain is going to give a serious fight to this, and quantum computing could be an add-on to get more throughput if that's a bottleneck we start hitting. It has surfaced in some scenarios, like I mentioned the Monetago solution. They actually moved away from blockchain and started using secure cloud, because essentially what they did is they're able to identify secure document in terms of a hashed algorithm on the cloud, which represents the asset. So it's a form of digitization different from, instead of putting it on the blockchain, they put it on the cloud, and it's equally secure and it's giving them faster throughput. So yeah, maybe that's how quantum computing, again, based on what I know, will probably converge to some point and enhance what blockchain can do.
That's a great answer, Manoj. Thank you very much. We are coming up on top of the hour. Do we have any last few questions here for Manoj before we close the session? No raised hands. No additional questions. Nothing in the chat. Well, Manoj, it was a great session. Thank you very much. Thank you for mentioning standards as being so important. The ICC, we were talking with the ICC folks a few days ago. You mentioned quantum computing. We're actually working on a webinar for September 1st on cybersecurity, which includes quantum computing in your supply chain coming up. So you hit a lot of things that speak directly to us. We wish you good luck with the future launch of Tradeson and the progress you've made so far. Very exciting. Thank you very much for joining us today. So where can folks reach you if they want more information?
Thank you for having me here. So I'm available on my LinkedIn profile, as well as, you can always reach out to us via the Tradeson website, www.tradeson.com, or besocial@tradeson.com. And we are, it'll get to me one way or the other. So that's, you can find me on MANSAX, Mansax. If you look for that, I'm sure you'll come across me on the LinkedIn profiles as well. So happy to discuss, and thank you for having me here today, as well as to the audience for listening in. I hope I've been able to increase the awareness levels. By no means was my talk complete. The world is very complex, and the number of things going on are huge. I only represent the tip of the iceberg, as they say, in terms of my knowledge.
Like you mentioned, we could speak for hours and hours on a lot of these different subjects, right? So thank you once again, folks. We will share the slides that Manoj presented. I think your contact information is on those slides as well. We'll send out the recording in a few days. So thank you very much for joining today, our session, and we look forward to having you on the next one. Enjoy the rest of your day.
Thank you, everyone.
Enjoy, and thanks also from my side. Have a great one.